Good afternoon, everybody. Thank you for joining us today for our first seminar of the year. Happy New Year. My name is Sapana Banskota. I am the branch manager for the City Hall and Etobicoke branch locations. I have worked at Alterna Savings for most of my career for the last 18 years, and I am very pleased to bring this presentation to you all today. So today with me, we have Nancy Karlovich, Community Business Banking Advisor, and Vishesh Pandya, Wealth Advisor for Alterna Wealth. We are thrilled to bring this wealth planning seminar to you. We hope you enjoy the presentation, and you are welcome to ask questions at the end. So the next slide, thank you. So this slide is about who we are. The former TMECU served the city of Toronto community for over 76 years, and in late 2018, merged with one of the largest credit unions in Ontario, Alterna Savings, and just this past October, our banking systems actually came together, and our members now have access to a network of 36 branches across Ontario, along with a new suite of products and services. Our original branches remain open, and most of our former employees remain in place. And now you have the ability to bank within our network of many more branches, 36 branches across Ontario, including Peterborough Community Savings. Okay, so why a credit union and why Alterna? As you can see from this slide, there are a number of benefits to banking with a credit union. Credit unions are nonprofit. We are owned by our members. Our profits go back into bettering our products and services for members. Our super friendly and knowledgeable staff in our branches offer members a personalized experience, unlike the bank's cookie cutter approach. We typically have lower service fees and a full suite of products that you may not have expected from a credit union. Our ATM network is connected with other credit unions in Canada and some banks as well, giving you access to over 3,600 ATMs surcharge free. So a little bit about Alterna and why Alterna is the financial institution that could be right for you. So Alterna Savings is the third largest credit union in Ontario and one of Canada's top 10 credit unions. Alterna was founded in 1908, so we've got a long history, and was the first full-service member-owned financial cooperative outside of Quebec. Since then, we have integrated with several other credit unions across the province, including the TMECU when we completed the merger in October 2020. We currently have 36 branches across the province and more than 183,000 members. We have an industry-leading investment management service with Alterna Wealth, and you can count on us for the strength and security of a financial institution with over $9 billion in assets under management. And every day, there's over 600 people who take pride in putting our members first. Our caring culture has been recognized by the prestigious Employer Awards, the National Capital Region's Top Employer Award, which was awarded 4 years in a row from 2017 to 2020, and also the Aon's Best Employers Platinum Level Award, which was presented to us in 2019. Okay, so here I will pass the presentation on to Vishesh, who will go over the next few slides.
Thank you, Sapana. Hello and good afternoon, everyone, and thank you again for joining with us today. My name is Vishesh Pandya, and I'm a wealth advisor at Alterna Savings. So today we are going to take a deep dive into different spectrum of wealth planning. We're going to start off reviewing some data and stats about the challenges that Canadians are currently facing when it comes to their retirement. Also, we are going to see some data about how having a dedicated advisor and having a plan in place keeps you on track of achieving your personal financial goals. Then we're going to also review different type of registered plans, their features and advantages, like the RRSP, TFSA, and RESP plans. We are also going to focus on what are the different platforms available at Alterna Wealth, what is the Alterna Wealth process, what is our difference compared to other institutions. And at last, we are also going to review a sample plan that we have prepared so that you can actually see what kind of services you can get when you start having a relationship with Alterna Wealth. Before taking any further time, let's just dive into the presentation. So this slide shows us the challenge, and I'm just going to go over some data points that more than half, that is 55% of working age people, say that they will continue working to some extent in retirement. Only 29% of working age people think that they will be financially comfortable in retirement based on how their retirement savings is progressing. 71% of millennials are concerned about running out of money affecting their retirement. 38% of millennials have not yet started savings for retirement. And only 5% of people think that millennials are in the best position for the comfortable retirement. So this slide shows us what are some challenges that Canadians are facing when it comes to their retirement savings, retirement planning. This slide focuses on different life stages have different goals for each and every individual, and how having a plan in place and working with an advisor helps you keep on track again. We can see that from the life stages, for example, so building age, you can see that people are going to university, having first job, getting married, purchasing their first home, having that first child. And then we go to accumulation stage where people are building their career, purchasing second property or purchasing a bigger house. Some are receiving inheritance. Also, life is very uncertain. So there are unexpected events that happen. Some people go through job losses, they have to change their career, go back to school. Some people go through divorce and separations. And we are also seeing a lot of sandwich generation that is occurring currently, that people are supporting their elderly parents as well, and also their children. So current generation is also supporting two other generations. So they are having a double responsibility than they were used to. And when it comes to the third or last stage of income and wealth transfer, people are looking for getting early retired, getting fully retired, having grandchildren, spending time with them. Some people go with suddenly getting single or losing their loved ones. People are also facing long-term care issues, health issues, and leaving a legacy for the kids and grandkids. So at different life stages, we see that people have different goals, and it always changes. So here, the emphasis of having a plan is much more than just having a document. Having a regular review of the plan, making sure the plan is updated according to the changing life circumstances, plays a much greater role in the personal financial goals. This slide shows us data again about how people with comprehensive planning are feeling about their financial affairs, on track to retire, track to save, compared to the people who don't have a plan. So we can see from the data clearly that people with having a comprehensive plan are better off when it comes to tracking their financial affairs, on track to retire, on track to achieve their goal of savings, are much better prepared to meet unexpected financial emergencies, much better to face tough economic times, and also are better off when they're looking after their loved ones. So having a plan in place, again, shows that people, and give an example here, when the current environment where there was a pandemic lockdown, COVID-19, people who had a dedicated advisor or who were working with their financial advisor or having a plan in place were much better in terms of meeting that financial emergencies and also facing the tough time that we all went through and still are going through right now. So the next slide is benefits of wealth planning. This slide is much more focusing on having a plan definitely helps achieving the long-term goals about able to save, able to retire, but then also helps in short-term planning about, we can see here that 74% of people feel that they are able to attend annual vacation compared to only 44% of people who don't have plan. Same thing for people who have enough money to live in retirement and live the life they want. We can see that 61% of people are much more able to do that compared to only 31%. And people also have money for splurges when they have a plan, they have a process, and they're working with an advisor. And having that financial well-being and having a wealth plan done, people are not only better off financially, as we can see from this data, that 85% of people are financially better off or feeling financial well-being, but there's also an emotional component, overall satisfaction or contentment, and then they feel that they have achieved a life objective, that they are able to retire at the age they want and live the life that they've always wanted to live after retirement. So these are also a lot of qualitative benefits of having a wealth planning. This slide is focusing on benefits of working with an advisor. So here we can see that working with an advisor encourages savings as well as investing. So we can see that households which do not engage in any advice compared to people who are engaging in an advice, we can see that savings rate different is almost more than 50%. So it's from 6.7% to 10.8%. Not only that, working with an advisor also encourages to make sure that your savings are allocated according to your investment profile, or much better than the non-cash investments. So we can see here that people who are working with an advisor have 81.1% allocation to non-cash investment, then only 53.6% of people who have not engaging with an advisor. So having a non-cash investment also helps to generate more growth, more income, and compound the money or savings faster that people are saving. So working with an advisor helps savings as well as investing. To complement that, we can see the next slide that advice clients have greater net worth over time. So as we discussed earlier, that working with an advisor increases the saving rates and also make sure that increasing the non-cash investments, we can see that people or households who have working with the dedicated financial advisor for more than 15 years, we can clearly see that net worth compound almost 4 times than people or households with no advice or no advisor working with them. So there are a lot of benefits working with an advisor in terms of qualitative and number aspect, but also in quantitative terms. Working with an advisor definitely helps. What is wealth planning? So wealth planning is a deliberate process that involves creating and monitoring a series of strategies to help you meet your financial goals. There are different types of wealth planning, can be retirement planning, investment management, cash flow management, risk management, estate planning, and tax planning. When it comes to retirement planning, it goes into much more deeper, figure out how much you need to, sitting down with our members and figuring out how much they need to save for retirement, what is their dollar amount that they want to save for retirement, and what is the age that they want to retire, how much they need to save regularly to attain that goal. And also that combines with investment management, where making sure designing a proper asset allocation or constructing a portfolio where members are saving and their savings are directed to the investment or the funds where the member can grow their savings at much more better rate. Cash flow management is also part of retirement planning, or can be done as in retirement planning, where we are seeing where the income sources are coming from, what are the expenses, how much taxes in average we are paying, what are the discretionary expenses, what are the non-discretionary expenses, and give us an idea about what are surpluses and is there any deficit. If there are surpluses, then where we can allocate that. If there are deficit, then we can address it right now and make sure that we are correcting it and staying on track. Risk management is a process where it comprises of different types of insurance that people need, different types of coverage people need, whether it's life insurance, disability insurance, critical illness insurance, and all the other types of insurance coverage that people get to make sure that themselves and their loved ones are protected if there any uncertainty happens. Estate planning takes into consideration about members having a proper will, taking care of the last wishes of member, making sure that the proper beneficiaries account to each and every account according to members' wishes, having the power of attorney, making sure if showing the members that what their estate will look like at the end of their lifetime, and proper planning to address that if member have some last wishes to give to or donate to any charities or any other stuff, taking care of that aspect. So estate planning is very important when it comes to leaving an inheritance, creating a legacy, and making sure a smooth transition. Last but not the least is tax planning. Tax planning is focusing on how to make sure that pre-retirement, you're maximizing all the registered plans, whether it includes your RSP or your tax-free savings account, and have your portfolio is also invested when it comes to your non-taxable to taxable account, right? So just making sure that we are optimizing taxes or tax planning in that order when it comes to investments. When it comes to in retirement or after retirement, tax planning just takes into consideration, and this is a part of an in retirement planning where we sit down with member and address which accounts they need to withdraw from. Do they need to use their social benefits first, or do they need to use their RSPs first? Just making sure having that discussion and digging deep down into actual numbers and see where we can get an advantage about which different strategies we use. So these are all different types of wealth planning that we engage with our members on regular basis. So wealth planning and the Alterna difference. So at Alterna Wealth, this is the process we follow during each and every meeting that we are having with our members. So first we start with discovery and need analysis. Discovery is much more in terms of qualitative as well as quantitative discovery. So making sure that we are asking all the right questions to the member and getting all the right information, whether it's tax information, their pension information, their social benefit information, their insurance information, and getting all in terms of number. So that helps when we are doing a plan development. Discovery in terms of quantitative as well, just sitting down the member and understanding what are their goals, where they want to go, what they want to achieve, and how we can help them, and jotting down all that qualitative aspects, which is very important when we are doing or forming a plan. So goal setting and review the current state also comes into a discovery process where we are also making sure that sitting down with member and having that clear discussion about where we are and where the member wants to go and how we can do that. The third stage is plan development recommendation, where a wealth advisor like myself works on preparing the plan, reviewing different options, doing all the permutations and combinations, and making sure recommending an appropriate plan or sometimes multiple strategies and present in front of member and explaining pros and cons of each and every one. Once the plan is recommended, we also focus on investment strategy. So just make sure that we are doing the portfolio construction and management selection, everything in terms of each and every account for all the members, and developing a written investment strategy for the member that we're going to complement the plan and making sure we achieve the goal that we decided when we met the member initially. The stage is implementation of the plan. The fifth stage is implementation of the plan. And the last one is review. So review and monitor is the most important step in a way that financial planning or any kind of planning is not a one-time event. We sit down with our members sometimes once a year or semi-annually. We sit down with the member, making sure that the plan is reflecting what the current personal financial stages member are in, and also update if there's any changes into a personal situation that member is facing. And our plan should reflect the same way. So it's a process where we regularly review and update the plan and making sure that we are still on track. Here, this slide focuses on what are the different platforms or what are the different options that Alterna Wealth has to offer to all different types of member base that we have. See, Alterna Wealth is a custom advice solution where we focus on, again, as we discussed, having a plan in the place, having a dedicated advisor, and making sure we are working towards achieving members' personal finances goal. And Virtual Wealth is a robo-advisor platform where it's for the member base who just want to make sure, who are much more tax savvy, and they want to make sure that they still need an advice, but don't want to deal with regular advisors. So they can use Virtual Wealth where they can just go online, fill out the investment questionnaire. They'll have a portfolio assigned to them, and they can start investing the money through Virtual Wealth. And the last platform that we have is Acute Investor, which is our self-serve option. So that's our award-winning platform for all the doing your own investing members. There you can just open your investment accounts and make sure you're buying and selling securities on yourself. So this is for much of our member base who knows, who are professional, who are traders, and who doesn't need any financial advice. They can buy in their own securities. And this is the Q-Trade platform is for them. So as you can see, we have different type of options or platforms available for each and every member need. So depending on what member feel comfortable with, they can go with Alterna Wealth, their custom advice solutions. They can either choose Virtual Wealth, our robo advice platform, and Acute Investor, which is our self-serve platform for our members. Now, the next couple of slides are going to focus on a registered retirement savings plan, that is RSP, tax-free savings plans, that is TFSA. What are the advantages of each and every account? So the RSPs are, the contributions made in RSPs are a great way to reduce your current tax rate, right? So once you make a contribution into your RSP, your earned income goes down, so that way your tax rate or your marginal tax rate goes down for that particular year. When leveraged within your plan, can help reduce the amount of tax you pay in lifetime. So when there's a plan that is prepared in advance, RSP or even tax-free savings account, the advantage increases because now you're contributing much more smartly and making sure it is following the plan that you already made in advance. Your savings do the work by sitting in the account and growing tax-deferred basis. So the advantage of RSP is whatever money you're putting in is growing and compounding over the years on tax-deferred basis, and you can, in retirement, you can, once you're retired, you can choose to withdraw it, and then you can get taxed on that. The idea is your retirement income will be at a much more lower level than your current level of income, and that's how you're going to tax at a lower rate of interest. Income you earn from age 65 onwards is eligible for $2,000 in tax credit. So that is much more in terms of planning aspect, where we're sitting down with members and making sure that you get all the seniors personal tax credit or the other tax credits on and onwards age 65, and making sure we are using those dollars in maximized aspect. A spousal RSP allows you to split retirement income and pay less tax as a couple. So this is a strategy which a high income earner and a low income earner spouse can use to their advantage, where they're still making the RSP contribution from a higher income spouse to a lower income earning spouse, making sure that in retirement, when the income will be lower for the lower income spouse, they are withdrawing the money at a much lower tax rate. And as a household or as a couple, they are paying less tax on average as a couple. So these are different type of strategies that when RSP, when opening an RSP or having a discussion about RSP, you can talk with your advisor and take their guidance and approach. When it comes to TFSA, this is the new, comparatively new than RSP, secondary type of a tax-free savings or savings account that a lot of Canadians are using now and getting much more popularity. Because here the investment grows tax-free basis. So compared to RSP, which was growing tax-deferred basis, here their after-tax dollar grows into tax-free income. So you can withdraw it at any time and recontribute in the same amount in future without affecting your contribution limit also, and making sure that all the withdrawals are completely tax-free. You don't have to pay income tax or doesn't affect your government benefits. This strategy is used by people where it's usually they're getting a higher pension, they have so much higher in retirement income that sometimes their social benefits or government benefits get clawed back. So tax-free savings account is a good way to save, but make sure it doesn't hurt your income taxes or doesn't make sure it hampers your government benefits that you're entitled to. By designating a beneficiary, this account is helpful when estate planning. It goes for much more like in tax-free savings account and even for RSP, where you have a designated beneficiary, specifically your spouse or anybody else. It helps you during your when it comes to estate planning. RESP or Registered Education Savings Plan. So RESP is a great way to save for your child's or grandchild's post-secondary education. Lifetime contribution limit is $50,000 per child. RESP contributions are non-tax deductible, but any investment income that is earned within the plan isn't taxed until withdrawn. So it provides tax deferred growth. Government will also contribute a CESG, that is a Canadian Education Savings Grant of 20% of what you put in, up to $500 per year, to a lifetime maximum of $7,200 per each child. So the math work out in a sense that if you contribute $2,500 that per year, then the government will match up maximum of 20%, that is $500 per year. And that way you can get 20% free government grant into your plan. There are different types of plans such as family RSP and individual RSP. Each and every type of plan has different advantages, and it's according to member needs. Then we need to make sure that we are opening or recommending a right type of RSP plan to our members. So the last part of our presentation, we are going to focus on a sample plan that we have prepared for a member. So you can actually see when you're engaging with Alterna Wealth, what kind of services you get. This plan starts with members' net worth statement. Usually a net worth statement gives you a holistic picture about how much you have saved in different type of account, whether it's your RSPs, tax-free savings account, your pension plan, and also sees if you have any liabilities, that is your mortgages, car loans, anything, and gives you a total net worth, that is assets minus liabilities, to give you what is available for your retirement. When we come to retirement goal coverage, this helps us to see what is your members' ability to cover expenses, pay taxes, and maintain their discretionary spending during their retirement. So this chart shows us whether you have insufficient coverage for retirement, partial, or do you have a strong coverage. Here we can see that member has a strong coverage, about 96% for their retirement, but we can definitely see that on the right-hand side in the slide, that during the later years of their retirement, they might face some shortfall in terms of how much ability they have to fund their in-retirement needs. So next slide shows us where the retirement income and which sources they are coming from. So here we see, for example, that the blue line shows us that the funds are coming from Canada Pension Plan, Voltage Security of Quebec Pension Plan, so CPP, QPP, and OAS. Other income, if member have some RIFs, some other source of rental income or any other income, then we can see that. Here also we can see asset withdrawals, so member are withdrawing from their assets, right? And the last thing we see is a shortfall. So the plan gives us an option that what are our options now that we have seen a shortfall, how we can address that and how we can cover that. So it gives them different options. For example, in this particular plan, we see that member can decrease their retirement expenses and cover only 97% instead of 100%. Or they have an option to increase their monthly savings by $103 to make sure that they are 100% on par with the plan or their needs. Or they can do a lump sum saving of $13,387, or they can choose to defer their retirement by, let's say, a year. Now in this plan is at 66. So these are the discussion we have with our member to make sure what is the option that we want to choose and how we want to progress for that. And this puts us a real picture about where the member stands and what are the different ways the member can still achieve their retirement goal. So this slide is very, very helpful when we are looking at different options available to the member. When we come to the cash flow plan, as I mentioned earlier as well, the cash flow plans focus on different types of inflows and outflows. So here we see we can actually break down numbers by number, that what is the earned income, what is the pre-tax pension income money, what are members receiving from CPP and all the security and other benefits, what are the other income, what are the withdrawals from their registered or like RIFs, NTFSA, non-registered investment, and what is the total cash inflow that members are getting. When we go towards the outflow, we see what are their expenses or their monthly cash flow need, how much income tax the member are paying, and also if they're making some contributions to their plan pre-retirement, we can also see where the contributions amount are going as well. And that gives us a total idea about what is the cash outflow picture looks like. And we can arrive at a number of whether it's a surplus or a deficit. And if it's a surplus, then we can sit down with the member and see where we need to save or they can do with the funds. And if they're deficit, then where we can make sure that we are cutting down on expenses, or what we can do much more to make sure that there's no deficit in pre-retirement or even after retirement or in retirement. Asset accumulation and depletion is a chart that shows like how your capital is growing over end of the year over time in general, or how it is depleting also, right? When you're using the savings in retirement. And it always ends with the plan always usually ends with the death of last surviving spouse or client. So we can see starting of the year, member have some assets, then assets are growing and reinvesting. Members are making some contributions initially before retirement. They're not taking any withdrawals, and at the end of the year, their assets are growing by this particular number. completely opposite. If we go to last couple of rows, then we can see that during or after retirement, members are not doing any contributions, members are taking withdrawal, and what are the end of the year assets like. So this gives us a clear idea, like what does the growth rate look like in terms of investments, reinvestments, if we're taking withdrawal, how long the money will last, and where again it will tie down with the cash flow, that where will be surplus or deficit, or in which year. Detailed analysis of your projected estate value. So as we have discussed or touched base earlier, estate analysis is also a very important part of wealth planning, where we are sitting down with our member and doing an analysis and projection of their net worth at the time of their death or at the death. Also looking into death benefits, taxes, transfers, looking at which accounts will go to probate, and much more in detail, like making sure that members' last wishes are addressed in a proper manner, whether they want to make sure of charitable contribution or they want to create a legacy, and sitting down with our members and making sure, visualizing that what will be the net estate and disbursement will look like, to make sure that they have the peace of mind that they took care of all the estate aspects when they were living. Analysis of your current portfolio. So this is a very important aspect where we can provide a lot of value to our members, where if the members are have a current investment or they are investing in some other FIs, different accounts, we can dissect their portfolio, we can review their portfolio, we can conduct analysis on the portfolio and see, break down in detail, like what is their asset allocation, where are they currently investing, are they maximizing on micro strategies that are in the market right now, making sure what are the fees that they're actually paying, and also looking down what is the real rate of return that that portfolio is generating, and is there some other option or better option available to our members. So we can definitely do that for our members. If they have a current portfolio, they can we can definitely do an analysis on that portfolio for members. So that's it from my side. I'll just hand over to Sapana.
Thank you, Vishesh, for the presentation on what our wealth team can do for our members. This slide just shows the contact information for myself, for Nancy, and for Vishesh. We will share this presentation and the contact information for all of us so that you can reach out to us. We also wanted to mention to you that this is actually a series of slides that we have planned. We are planning to do a series of seminars that we have planned, some webinars we have planned for the year. We're planning to do a seminar or a webinar every quarter. So there will be a mortgage seminar that will be coming up in the spring. So stay tuned for that one. We'll be working closely with Karen and Marianne from Katapsa to bring those to you, and we hope that you will join us again. In today's times, we are all anxious about what's next with this pandemic that's looming, and you may be thinking more and more about your financial well-being than ever before. And we are here for you to help you get through this. So please do reach out to us, either to myself, to Nancy, or to Vishesh, and we can get you into the right seat to talk about your financial well-being, come up with a plan. Planning for retirement is something that's very important. A lot of times, we plan for things like vacations or our weddings, and we spend hours and hours and months and maybe even years for weddings, planning those things. But sometimes we forget how important retirement planning is. So that's important, and wealth discussions are very important. We have some questions in our chat from people who have inquiries. So I'll just go over some of the questions that we have here. We have a question about if a member is asking about opening an or somebody is asking about opening a RSP or tax-free savings account under the self-serve platform, the self-directed platform. Vishesh, did you just want to answer that question?
Sure. So that's a very good question. Definitely, you can go to the Acute Investor website and open whether it's RSP, tax-free savings account, taxable account. You can open each and every type of account. They have access to all the accounts, and you can start trading as soon as the account is open. So yes, Acute Investor gives them an opportunity to have access to all the accounts and help the members start trading on their own.
Okay, perfect. There's another question about, can we go to any Alterna branch to see an advisor for the financial planning, wealth planning? And yes, you can go into any Alterna branch. We have a list of our advisors on the website, on our website, alterna.ca. You can check them out there, or you can just call our contact center and they can book you an appointment to see one of our wealth advisors at any of our locations. There was another question about, can you elaborate about the complementary portfolio review? Vishesh, did you want to take that one?
Sure. So that's a very good question. When it comes to portfolio review or portfolio analysis, what we do is you can actually send your investment statements or statement of your accounts, right? And we can run Morningstar analysis, and we can do that complete review, have a Zoom meeting or a phone meeting with our member after review. Just want to make sure that we convey the same, like what is the analysis telling us, whether it's some of the fees they are paying, what is the return they're getting, where they are investing, what is the asset allocation, and any other question that member had that they were kind of not clear when they were investing. We can definitely answer them in much more detail and provide the same report to our member as well.
And there was one more question. If we go to any branch, do we need to let the branch know that we are members of CATAPSA? No, that is not necessary. You do not have to. You can if you'd like. But yes, you can go into any branch and you can open an account, or if you're already a member, you can speak with any of our advisors there. I think that was the end of the questions. We thank you again for attending today and listening in on this very important topic, and we look forward to presenting other topics throughout 2021.
Thank you, everyone.
Thank you, everyone. Hey.
Perfect. Did you stop recording?
I did.
Perfect. So this was good.
Oh, hang on.